Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar, a second bullish white soldier on Friday and a follow-on higher to the previous session's combined key reversal up and bullish engulfing pattern, if only just on the latter. This was a continuing reactionary move back up from the gold long moving average below, currently 107.28, and the April 2020 low at 107.25. We are still below the small March-based dark blue descending triangle pattern, made up in part from the overhead July 2017 to November 2018 head and shoulders neckline, currently 109.43, along with the close by 50% Fibonacci line of the January 21 to September 22 move, both at 109.44. Well, effectively, they're both at 109.44. The break below the ascending triangle gave a primary target X at 107.60, which was reached last week, and a secondary harder to reach target X1 down at 106.95, which is still live. The primary target X was also down at the first support below the May 2020 low at 107.66, and the secondary target X1 is just under the support of the 50% Fibonacci line of the July 23 to February 25 move at 107.09. Meanwhile, we also had a March-based double top pattern with a primary target X2 down at 107.53 and a secondary hard to reach target down at just about the same level as target X1. And the primary target X2 at 107.53 was reached last week. On top of all that, 2 weeks ago the market made a weekly key reversal down at the top of the recent market, which for most of last week had seen a follow-on lower before the reactionary move back up later in the week. This nevertheless, at the least temporarily, lays at rest the idea of the market contemplating a possible annual key reversal pattern. However, I would still continue to keep an eye overhead at the September 2024 high at 112.13. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, we have a number of significant resistances ahead of that, starting with the 50% Fibonacci line at 109.44 and the shallow dark blue neckline. Please note the 50% Fibonacci line had previously capped a reactionary rise back in November last year. Looking below, please keep your eye on the flatlining gold long moving average. Now, so far today, a lower open, but then a move higher, peaking just over last Friday's high, but pulling back from there. Cable, aka sterling against the US dollar. An indecisive spinning top pattern on Friday after the previous session's key reversal up and bullish double. Looking overhead, we still have the secondary hard to reach target X1 up at 131 even for the breakout from the January to early March dark blue ascending wedge pattern. In the way, we have the November 2024 high at 130.47, whilst below we have the November 2020 low at 128.52, which acted as support 3 weeks ago, and then the flatlining gold long moving average below that, currently at 128.06. I've recently said how I would continue to keep an eye overhead at the September 2024 high at 134.34. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, we have a number of significant resistances ahead of that, starting with the low of December 2020 plus the high of July 23 at 131.33 and 131.44 respectively. Now, so far today, a lower open, then pushing below Friday's range, and now a push higher, also exceeding Friday's range and setting us up for a possible key reversal today. Thus, if we close tonight either over 129.45 or under 129.38, then we'd be on. Anything in between will have a lesser outside day pattern. Right now we're looking at a possible daily key reversal down, but there is plenty of time for an alternative ending. US dollar against the Japanese yen. A key reversal down on Friday after the previous session's second bullish white soldier. It seems the overhead resistance provided by the combination of the bright red upper time, currently at 151.35, of the July 24 to January 25 bearish Andrews pitchfork, as well as the declining gold long moving average, currently at 151.47, and the green short medium moving average, currently 151.53, which incidentally are about to form a dead cross, as well as the August 1990 high at 151.58. as well as the eroding effects of the 50% Fibonacci line for the whole of 2024 at 150.76. All these turned the market lower. Prices halted at the 50% Fibonacci line, the July 23 to July 24 move at 149.61, as well as just above the lower trend line, currently 149.71, of the small March-based bull channel, currently 149.71 to 151.67. I suppose the upper trend line of this small bull channel also helped in capping the rise. This seems now to be an end to the recent pause and countering higher to some of the larger bearish patterns we've seen. The market remains within the larger big picture bearish item, and that is the bright red July 24 to January 25 bearish Andrews pitchfork. This pitchfork shows the bearish angle of attack of this market. At the same time, all this was happening, we had another more immediate pattern to deal with. And that was the pink early February to late March descending wedge pattern. This pattern had been the very recent driver lower and helped an earlier rounded top pattern reach its primary target. Since the high in the middle of March, we have seen a slow break and exploitation higher from this pattern towards a primary target X in the 153.59 area, and a secondary, harder to reach target X1 up in the 156.68 area. Both of these targets are outside the bright red bearish Andrews pitchfork, and earlier raised questions as to whether or not to finesse the bright red bearish Andrews pitchfork into a shallower bearish shift pitchfork, which I obviously do, but which would become passe if prices turned lower again. This key reversal down threatens both the primary and the secondary topside targets now. So far today, a significant continuation lower, breaking below the very recent lower bull channel line, as well as the 50% Fibonacci line below at 149.61. Prices have dropped down and halted at this moment at the 38.2% Fibonacci line of the January 23 to July 24 move at 148.68. Now below this we have a lesser Fibonacci line at 148.11, but then really nothing until the 61.8% Fibonacci line of the July 23 to July 24 move at 146.69. This is also the low zone from earlier this month and a potential target zone for this break lower. US dollar against the CNH. An indecisive spinning top on Friday that was also a small bullish harami. After the previous session's larger bearish harami, prices were capped on the closing basis by both the declining green short medium moving average, currently at 727.06, and the rising mauve medium moving average, currently 727.97, as well as a little overhead by the middle time, currently at 728.57, the shallow bright red late December 24 to late January 25 bearish shift pitchfork. Meanwhile below, we still had the combination of the now breached and possibly broken dark blue downtrend, currently at 725.60 of the January to March 2025 descending wedge pattern, and that's currently 720.71 to 725.60, as well as the dubious support of the green extension to the lower trend, to the upper trend line, currently at 725.66 of the January to March 2024 ascending triangle pattern. We're seeing the market highlight the bright red bearish shift pitchfork as the main immediate pattern to watch. Now so far today, a higher open, but then pushing over the green short medium moving average, but soon turning lower and pressing down through the dark blue breached upper trend line and bright green neckline extension, but not managing as yet to stabilize back within below the dark blue descending wedge pattern. US dollar against the Brazilian real. A third bullish white soldier, one that could possibly be seen as a construction of a 3-day bearish advance block pattern. That is definitely one to watch out for. We'll have to see how today and tomorrow perform if this is to be the case. It was nevertheless a push up and close back up over the slowly rising gold long moving average, currently at 574.34, and December 2021 high at 575.78. As well as a test of the recently finessed dark blue December 24 to date downtrend, currently at 576.11, though the market did not manage to close over the downtrend. Looking above the dark blue downtrend, we have the October 2020 high at 580.70, and then the so far unreconstructed bright red uptrend, currently at 582.41, which I would need to finesse lower at some point. plus the green descending short medium moving average, currently at 581.17. Now in the even bigger picture, we are set up with just today's activity left to go for the market to make a possible monthly key reversal in March here. Thus, if we close tonight either over 591.77 or under 567.49, then we'll be on. Anything in between will have the lesser outside month pattern. At the moment, we have moved up from a possible monthly key reversal down to a lesser outside month pattern. Meanwhile, looking below, we have the support of the lesser 38.2% Fibonacci line at 565.07, which is the gateway to congestion from June to October last year between roughly 565.07 all the way down to about the flatlining purple neckline of the June to September last year head and shoulders continuation pattern. That's currently at 540.61. There are not many nearby defined support lines until you drop under 545. Finally, 2 weeks ago, the market achieved the primary target at 563.35 for the drop down from the large early October 24 to mid-January 25 rising expanding wedge pattern. The harder secondary target, X1 down in a 541.95 zone, is still live, though I continue to wonder if I should retire it as it is quite far away below. US dollar against the Mexican peso. A third bullish white soldier on Friday. This was a continuing rejection higher from the test down 2 and 3 weeks ago of the significant support of the previously highlighted congestion zone between 1987.96 to 1991.31. However, prices have run up into the overhead resistances provided by the bright red lower bull channel line, currently at 20.35 even, of the very gently rising early November 24 to early March 25 bull channel that had become a rectangle top pattern, along with the flatlining mauve medium moving average, currently 20.36.61, and the green short medium moving average, currently 20.37.97. The market ended up breaching all these three and closing in amongst them. This all puts at risk the secondary, harder to reach target X1 down at 1948.90 for the break below the rectangle top pattern. So far today, well, a higher open with the market seemingly trying to base itself on the combination of the bright red breached lower uptrend as well as the green short medium moving average and mauve medium moving averages, though just about hanging in there right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.